A credit score of 800 opens doors that most people don't even know exist. Lower interest rates on mortgages that save you tens of thousands of dollars. Premium credit cards with massive rewards. Apartment approvals without a cosigner. Even lower car insurance premiums. But here's the part nobody talks about. Going from a bad credit score to an 800 is not some mysterious, years-long process reserved for financial experts. There is a specific, step-by-step system that can take you from rock bottom to excellent credit in about 12 months. I've seen people go from the 400s to over 750 in less than a year using exactly the strategies I'm about to share. And the best part? Most of these moves cost you absolutely nothing. Before we fix your score, you need to understand what it's made of. Your credit score is calculated using 5 factors, each weighted differently. Payment history is 35% of your score. This is the biggest factor. Have you paid your bills on time? Amounts owed, also called credit utilization, is 30%. This measures how much of your available credit you're actually using. Length of credit history is 15%. How long have your accounts been open? Credit mix is 10%. Do you have different types of credit like credit cards, auto loans, and mortgages? And new credit inquiries is 10%. How many times have you applied for new credit recently? Understanding these weights is critical because it tells you exactly where to focus your energy. If your score is low, the 2 biggest levers you can pull are payment history and utilization. Together, they control 65% of your score. Fix those 2, and you've already won most of the battle. Strategy number 1. Dispute every error on your credit reports. This is the fastest free way to boost your score, and most people skip it entirely. Studies by the Federal Trade Commission found that 1 in 5 Americans has an error on at least one credit report. 1 in 5. That means there's a 20% chance your score is being dragged down by mistakes you didn't even make. Here's how to do it. Go to annualcreditreport.com and pull your free reports from all 3 bureaus, Equifax, Experian, and TransUnion. Go through every single account and look for accounts you don't recognize, which could be mixed files or identity theft. Late payments that you actually paid on time. Balances that are reported incorrectly. Accounts that should have fallen off after 7 years but are still showing. Once you identify errors, file disputes directly with each bureau online. They have 30 days to investigate and respond. If they can't verify the information, they must remove it. I've seen people gain 50 to 100 points from disputes alone. A removed collection account or corrected late payment can dramatically shift your score overnight. Strategy number 2. Crush your credit utilization. This is the 30% factor, and it's the fastest way to see score improvements because it updates monthly. Credit utilization is the percentage of your available credit that you're using. If you have a credit card with a $10,000 limit and a $3,000 balance, your utilization is 30%. Here's the secret the credit scoring models don't advertise. You want your utilization below 10% for optimal scoring, not 30%, which is what most financial advice says. Below 10% and below 3% is even better. The absolute sweet spot is reporting a small balance, say 1 to 3% on one card and 0 on everything else. There are 2 ways to reduce utilization fast. First, pay down your balances aggressively. Focus on the cards with the highest utilization percentages first, not the highest balances. Second, request credit limit increases. Call each card issuer and ask for a higher limit. If your limit goes from $5,000 to $10,000 and your balance stays at $1,000, your utilization drops from 20% to 10% instantly. Most issuers will do a soft pull for this, meaning it won't hurt your score to ask. Strategy number 3. Become an authorized user on someone else's account. This is one of the most powerful and least used credit building strategies. When someone adds you as an authorized user on their credit card, that card's entire history gets added to your credit report. If they have a card with a 10-year history, perfect payment record, and low utilization, You inherit all of that. You don't even need to use the card. You don't need to have the physical card. You just need to be listed on the account. Ask a parent, sibling, spouse, or trusted friend if they'll add you to their oldest card with the best payment history. The key requirements are that the card should have a long history, ideally 5 or more years. It should have perfect payment history with no late payments. It should have low utilization, ideally below 10%. And the issuer should report authorized users to the credit bureaus. Most major issuers like American Express, Chase, and Capital One do report authorized users. This single move can add decades of credit history to a thin file and boost your score by 50 to 80 points in as little as 30 days. Strategy number 4. Build a perfect payment history starting right now. Since payment history is 35% of your score, you need to establish an unbreakable streak of on-time payments. If you've had late payments in the past, here's the good news. Their impact fades over time. A late payment from 2 years ago hurts much less than one from 2 months ago. And after 7 years, it falls off entirely. Going forward, set up autopay on every single account. Not minimum payments, though. Set autopay for the statement balance on credit cards so you never pay interest and never miss a payment. For other bills like utilities, student loans, and car payments, set autopay for at least the minimum. Then pay extra manually when you can. If you have no credit history at all, open a secured credit card. Companies like Discover and Capital One offer secured cards where you put down a $200 deposit that becomes your credit limit. Use it for one small recurring purchase each month, like a streaming subscription. Pay it off in full every month. After 6 to 12 months of perfect payments, you'll have a solid payment history foundation. Some secured cards will graduate to unsecured cards automatically, giving you your deposit back and increasing your limit. Strategy number 5. Diversify your credit mix. Credit mix accounts for 10% of your score, but it can make the difference between a 740 and an 800. Scoring models want to see that you can handle different types of credit responsibly. The main categories are revolving credit like credit cards, installment loans like auto loans or personal loans, and mortgage loans. If you only have credit cards, consider adding a credit builder loan. Companies like Self Financial offer small installment loans specifically designed to build credit. You pay a fixed amount each month, typically $25 to $35, and the money goes into a savings account. At the end of the loan term, you get the money back. Your on-time payments are reported to all 3 credit bureaus, adding installment loan history to your profile. Another option is a small personal loan from a credit union. These often have lower rates than banks and report to credit bureaus. Even a $1,000 loan paid over 12 months adds valuable credit mix diversity. Don't overdo this, though. You don't need 5 different loan types. 2 or 3 different credit types is the sweet spot. Here's what a realistic 12-month timeline looks like. Month 1 is your foundation month. Pull all 3 credit reports. File disputes for any errors. Request credit limit increases on existing cards. Set up autopay on everything. Get added as an authorized user if possible. Months 2 through 3, focus on paying down high utilization cards. Open a secured card if you have no credit history. Open a credit builder loan for credit mix. By month 4 through 6, your disputes should be resolved, authorized user history should be reporting, and your utilization should be dropping. You should see the first major score jump in this window, typically 40 to 80 points. Months 7 through 9, continue perfect payments. Let your credit age grow. Avoid applying for new credit. Your score should be climbing steadily. Months 10 through 12, fine-tune your utilization to under 10%. Let the compounding effect of perfect payment history stack up. Review your reports again for any new errors. By month 12, if you followed every step consistently, you should be looking at a score between 720 and 800, depending on your starting point. The last piece of the puzzle is monitoring. You need to check your credit score and reports regularly so you can catch problems early and track your progress. Free tools like Credit Karma, Credit Sesame, and your bank's built-in score tracker let you monitor weekly. Check your full credit reports from all 3 bureaus every 4 months on a rotation. Pull Equifax in January, Experian in May, TransUnion in September. This gives you year-round coverage without using all your free reports at once. Set up fraud alerts if you've ever been a victim of identity theft. Consider a credit freeze with all 3 bureaus if you're not actively applying for credit. A freeze prevents anyone from opening new accounts in your name. It's free, and you can lift it temporarily whenever you need to. Your credit score is one of the most valuable numbers in your financial life. An 800 score versus a 600 score can save you over $100,000 in interest over a lifetime on mortgages, car loans, and credit cards alone. That's the real reason to care about this number. It's not vanity, it's money. You now have the complete blueprint to go from any credit score to 812 months. But knowledge without action is worthless. Pick one strategy from this video and implement it today, not tomorrow. Today. If this was helpful, subscribe to the Wealth Code and hit the notification bell so you never miss a video. Drop your current credit score in the comments, and I'll personally reply with the first move you should make. Share this with anyone who needs a credit score reset. And I'll see you in the next one.